Hello everyone, thank you for watching this video. I'm Masanori Hirano from the University of Tokyo. So in this video, I'm going to talk about our model called STBM Plus, and this is advanced stochastic trading behavior model for financial market based on residual blocks or transformers. So let's begin. At first, here is our motivation. Recently, the financial market has significant risks. One famous example is 2007 to 8 financial crisis, as you know. The other example is flash crashes. Flash crashes happen in many markets such as stock market, currency market, and so on. The reason of these crashes are very various. For example, auto trading, news analysis, and so on. So one famous example is the first crash on May 6, 2010. This graph is a Dow Jones Industrial Average. There are very significant price drop. The reason was said to be one big sell orders. To avoid these significant fluctuations or uncertainty, there are many ways to analyze the problem of market. One promising approach is artificial financial market. Artificial financial market is a kind of computer-simulated virtual market. The benefits of artificial financial market is we can test hypothetical situations. For example, we can test a new regulation before its reintroduction. However, artificial financial market has some issues. For example, models are human-made, so some important features for model can be missing. So in this study, we try to build a model by reverse engineering of traders' behavior using actual data. Our purpose of this study is automatically building a model imitating trader for simulation based on data. This study is very advanced, so we only focus on HFTMM, which is a very specific trader and strategy. This is because it is easy to identify the data of HFTMM in actual data, and HFTMM simulation model is also sophisticated. So our target of data is Tokyo Stock Exchange, and we analyze very special data provided by JPX. Here is the explanation of HFTMM. At first, HFTMM is the abbreviation of High Frequency Traders Market Making Strategy. Basically, market making strategy is a strategy trying to get the profit between the best bid and best ask like this, and doing this strategy repeated we get plenty of profit. However, this strategy needs hedging of risk. It is because the price movement is more over than the profit between the best bid and best ask. So they try to hedge risk by monitoring and doing action very, very fast. This is research outline. Our research consists of these 4 parts. A to C has been presented in the last year, JSAI 2020, and A is the HFTMM order data extraction, and B is the task setting, and C is the baseline model called STBM. In the following slide, we quickly explain them. And in this year, we propose a brand new model for this task called STBM Plus. We also update task setting. So in the next slide, I will explain about them. So the data we used in this study is called order book reproduction data. This is provided by Japan Exchange Group. Thanks to them. And this data is very specially containing masked trader information and able to trace traders' order. We extracted HFTMM traders' order by this procedure. At first, we calculate 6 indices representing the features of HFTMM for each trader, then filter only HFTM traders by order frequencies. At last, using the clustering method, we found HFTMM trader based on their 6 indices. So This is a task setting. As an input, model accepts two inputs. One is market state, representing the order book. The other is trader state. It means where trader put the order on books before now. So the output is a prediction of the next action in coming 1 minute. They are same as last year. This slide shows the additional task setting. The data we used data from January to July in 2015 for training and validation, and data from the following months was used for test. These are training settings, and as an evaluation, we employed two measures. One is MSE, well-known MSE, and then the other is a KLD based on Kabak-Reiber divergence. This measure was calculated between the actual action and predicted actions, and KLD is newly employed in this study. This is the model outline, and this basic architecture is common among the STBM and STBM Plus, and this model accepts two inputs as I explained in the last slide, and market state are processed as a time series data, and we change each architecture of processing network like 1 and 2, and we also change the loss function for training. Here is the architecture of STBM. STBM is a formal model and baseline model in this study. This model is very basic using the LSTM, and then this is very primitive model. Next, this is one type of STBM Plus called Residual Connected STBM Plus. Most important feature of this model is that we employ the residual connected deep network here. We also made the other type of STBM Plus model. This model called the Transformer STBM Plus. In this model, we employ the transformer layers for combining two inputs using the attention mechanism. Moreover, we also change the number of layers of transformers, and then the n equal 2, 4, 6. We also changed loss functions. We employed two types of loss function. One is well-known MSE loss, and the other is KLD loss based on Kabak-Reiber divergence. So next, I will explain about the experiment. Here, we tested all patterns of experiment. I mean, we tested all combination of architectures and loss functions. So in the next slide, we also show the result of STBM models of the last year in the lowest row. However, model in this year, I mean 1 to 10 of this table is not hyperparameter tuned. It is because hyperparameter tuning for such deep network is very big burden for computational limitation, and hyperparameter tuning is not common practice in deep neural networks such as BART. So this is all the result. Each number means the mean and standard deviations. For example, the first row shows the STBM model trained by MSE loss have 0.177 means of MSE and 0.904 KLD. So according to this result, 6 layers transformer STBM trained by Kabak-Reiber divergence loss shows the best performance among all the results. So moreover, all STBM model 3 to 10 outperforming the old STBM. This means that this model achieves better representation of traders' behaviors. Moreover, we can also observe the more layers in transformers STBM generally contribute to their performance And in addition, trained by KD loss tend to show the better performance that trained by MSE loss. Then, why carbon divergence loss shows a good performance? Our estimation is carbon divergence was weighted by target probability. It means the MSE loss is only taking a squared error difference between the target and prediction. However, KD loss weighted by target probability, thus it helps to capture the important features in prediction tasks. Our other findings are residual connection and transformer are outperforming also in these tasks. So, moreover, like NLP tasks, more layers in transformer shows a better performance. So, as a result, we achieved to build a better reverse engineer model than the last year. So, as a future work, we will try to implement this model to artificial financial market. Thank you for your attention.